Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of Inflation Hedging Strategies for 2024, Smart Investments to Protect Your Wealth. Treasury Inflation Protected Securities, TIPS. TIPS are a type of U.S. Treasury security designed specifically to help investors guard against inflation. These bonds are indexed to inflation, meaning their principal value rises with inflation and falls with deflation. How TIPS work. TIPS pay interest twice a year, and the interest payments are calculated based on the adjusted principal. When inflation rises, the principal increases, resulting in higher interest payments. Conversely, if deflation occurs, the principal decreases, and so do the interest payments. However, at maturity, you are guaranteed to receive at least the original principal amount or the adjusted value, whichever is greater. Advantages of TIPS. They offer a risk-free way to ensure that your investment keeps pace with inflation. Since they are backed by the U.S. government, they carry virtually no credit risk. This makes TIPS a very low-risk option for conservative investors looking to protect their purchasing power. Investing in TIPS can be a straightforward way to add an inflation hedge to your portfolio. They can serve as a foundation for a broader investment strategy aimed at combating inflation. By integrating these traditional strategies into your investment plan, you can better protect your wealth against the eroding effects of inflation. Whether through precious metals, real estate, or TIPS, these methods offer reliable ways to ensure your financial stability in an inflationary environment. Alternative inflation hedging strategies. While traditional methods provide solid protection, alternative strategies can offer additional ways to guard against inflation. These approaches might not be as well known but can be equally effective. Investing in commodities. Commodities like oil, natural gas, and agricultural products are essential goods that often see price increases during inflationary periods. By investing in these raw materials, you can benefit from rising prices. Why commodities work? When inflation hits, the cost of production materials often rises, leading to higher prices for end products. As these raw materials become more expensive, the value of commodities investments typically goes up, providing a hedge against inflation. How to invest in commodities. You can invest in commodities through futures contracts, commodity-focused mutual funds, ETFs, or by buying stocks in companies that produce these goods. Each method has its risks and rewards, but they all offer a way to gain exposure to commodities. Cryptocurrency. Cryptocurrencies like Bitcoin and Ethereum are relatively new to the scene but have gained popularity as potential hedges against inflation. Their decentralized nature and limited supply can make them attractive during times of rising prices. Bitcoin. Often referred to as digital gold, Bitcoin has a capped supply of 21 million coins. This scarcity can make it an appealing store of value when traditional currencies lose purchasing power. Ethereum. While Ethereum doesn't have a fixed supply like Bitcoin, its growing use in decentralized finance, DeFi, and smart contracts gives it intrinsic value. As more applications are built on the Ethereum network, its value can rise. Risks and rewards. Cryptocurrencies are highly volatile and can experience significant price swings. They're not for the faint-hearted, but for those willing to take on risk, they offer a modern hedge against inflation. Investing in foreign currencies. Foreign currencies can provide another layer of protection. By diversifying into currencies from countries with strong economies and lower inflation rates, you can mitigate the impact of domestic inflation. How it works. When your home currency loses value due to inflation, foreign currencies can help maintain your purchasing power. You can invest directly in foreign currencies through forex trading or indirectly via ETFs that track foreign exchange rates. Currency risks. It's important to note that currency markets can be highly volatile and influenced by geopolitical events. Careful research and strategy are essential when investing in foreign currencies. Inflation-resistant stocks. Certain sectors and companies tend to perform well during inflationary periods. These inflation-resistant stocks can provide growth and income that outpaces inflation. Consumer staples. Companies that produce essential goods like food, beverages, and household products often see stable demand regardless of economic conditions. As prices rise, these companies can often pass costs on to consumers, maintaining profitability. Utilities. Utility companies provide essential services like electricity, water, and gas. Their steady cash flow and ability to adjust rates in response to inflation make them reliable investments. Energy stocks. Companies involved in oil, gas, and renewable energy production can benefit from rising energy prices, which often accompany inflation. By exploring these alternative strategies, you can add more tools to your inflation hedging toolkit. Each method has its own set of risks and rewards, but together they offer a comprehensive approach to protecting your wealth in an inflationary environment. Creating an inflation-resistant portfolio. Building a portfolio that can withstand inflation involves a mix of traditional and alternative strategies. Here's how to create a diversified, inflation-resistant investment plan. Diversification across asset classes. Diversification is key to managing risk and ensuring your portfolio can handle inflation. By spreading your investments across different asset classes, you reduce the impact of any single investment's poor performance. Mix of assets. Include a blend of stocks, bonds, real estate, and commodities. Each asset class reacts differently to inflation, providing a balanced approach. Rebalancing. Regularly review and adjust your portfolio to maintain your desired asset allocation. As market conditions change, rebalancing helps keep your portfolio aligned with your goals. Allocating to inflation-resistant assets. Strategically allocate a portion of your portfolio to assets known for their inflation-resistant qualities. Precious metals. Allocate a percentage to gold and silver. They act as a hedge and a store of value during inflationary times. Real estate. Invest in real estate or rights to benefit from property appreciation and rental income. Tips. Include Treasury inflation-protected securities to provide a low-risk, inflation-adjusted income. Considering risk tolerance. Your risk tolerance plays a crucial role in determining your investment strategy. Understand your comfort level with risk to make informed decisions. Conservative approach. If you prefer low risk, focus on tips, real estate, and utility stocks. These provide stability and income with lower volatility. Aggressive approach. If you're comfortable with higher risk, consider adding commodities, cryptocurrencies, and foreign currencies to your portfolio. These offer higher growth potential but come with greater volatility. Staying informed and flexible. The economic landscape is constantly changing, and staying informed is essential for maintaining an inflation-resistant portfolio. Monitor inflation rates. Keep an eye on inflation indicators and economic reports. Understanding current trends helps you make timely adjustments to your portfolio. Adapt to changes. Be ready to pivot your strategy as needed. If inflation spikes or the market shifts, having a flexible approach ensures you can respond effectively. Seek professional advice. Consider consulting with a financial advisor to tailor an inflation-resistant portfolio to your specific needs and goals. They can provide personalized guidance and help navigate complex investment decisions. By incorporating these elements into your investment strategy, you can build a robust, inflation-resistant portfolio. This proactive approach ensures that your wealth remains protected and continues to grow, even in an inflationary environment. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.